What's up, you beautiful people? Welcome back to Trades. How we doing today? Gotta give a little bit of a tribute to Lamp. Lamp over here has been holding the fort down during these live streams, but I gotta go take a quick leaky weeky over at the urinal over here in my bathroom. And a lot of people love this thing, so props to Lamp for holding up the fort whenever I'm gone. But I am here right now to deliver this message to you. What is up, everybody? Welcome to Trades, where we get technical analysis of different stocks in the stock market, as well as potential buy, hold, and sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. So today, we're gonna be keeping this pretty bare bones minimum. Want to keep as much time in your hands as possible, and just running you through the basic numbers and technical analysis that we have currently on AMC stock as of today. So we're going to go through Ortex, we're going to go through the daily short sale volume, we're going to go through the current in-the-money call options and a little bit of the call options, and finish off the video with the technical analysis setup, as well as show you a pretty huge buyer. I think a lot of people are aware of this, but for those who are not, we're going to walk you through the biggest buyer that we've seen on AMC stock, probably so far, and it's pretty exciting. So without further ado, let's get into the video. So before we get into this, I want to walk you through exactly what I'm going to be using on the technical analysis for when we come back to this. And it is going to be the 15 MA, which is this blue trend line, and the 200 EMA, which is this purple trend line. The 15 MA is the moving average. It's a 15-day moving period trend line that gives you an average price valuation trend line over that 15-day moving period. It's a lagging trend line, meaning that it does not predict the future. And then the 200 EMA is the exponential moving average. This is a price action-based valuation trend line over a 200-day moving period, which gives us a macroscopic perspective of the overall price action over that 200-day moving period. Again, it is a lagging trend line, so it does not predict the future. It only gives us an idea of what we're looking at in the past, so that we can put both of these together and predict some of the future outcomes. I'm also going to be looking at the overall volume on the stock. I'm going to be looking at the candle action, the trend action, all that sort of stuff, and we'll walk you through exactly what I'm looking for as we get into the chart setup here. So let's start off here with Ortex, because this is probably the most exciting piece of what is going on with AMC stock right now. And that is the numbers, right? The short interest numbers, which is absolutely freaking nuts. It's crazy. We're going to go over the utilization, the cost to borrow, days to cover, shares on loan, percentage of free float on loan, and the estimated short interest percentage of free float. So in order to understand all of this, we're going to start off with the utilization. Now, utilization is the idea of how many lendable shares are currently out on loan. So hypothetically speaking, if you had 100 shares on loan, 100% utilization would mean that 100 shares, out of those 100 shares available, all 100 of them are out. And 0% utilization would mean that out of those 100 shares available for loan, that 0 of them are out. So since we have 99.93% utilization, which is astronomically high, this is the highest that it has been since it has been 100% in the past. This means that they have 99.93% of the current available shares on loan out on loan right now. Now, this doesn't necessarily mean that every single share on loan is being shorted. As you can see, there's a little bit of a difference, right? So you see 150 million total shares on loan, and that comes out to about 36% of the 36% of the free float, right? But that doesn't equate to 23%, short interest, right? That would mean that all the shares on loan are currently not being shorted. We're going to walk through that in a little bit, but I wanted to preface by saying that this utilization does not refer to the exact number of shares that are actually being shorted. The cost to borrow, this is actually not correct right here. Ortex is a little bit lagging in that sense. So we're going to use iBorrowDesk to show you what this cost to borrow is. This is an annualized interest rate that short positions and people who are out on loan pay on their stock. Now, I've seen people ask, excuse me, I choked on my spit. Oh, God. I got too excited. Anyways, the short borrow fee rate, this will go up and down. I've seen people ask this a couple times. Trey, why does this go up? Why does this go down? And the short borrow fee rate actually went down today, right? It went down from 21.2% at its height down to about 18.9% today, which is actually still incredibly high, right? Now, the reasoning for this is that short borrow fee rate coincides with price action, hard to borrowness, like how readily available is it for a stock to be shorted, right? Which for AMC, it's actually not really even possible on Webull. There's not even a short button available for this. So it's those two things and the chances of coming out profitable. How much risk is there associated with having a share on loan, right? A loan, which is the shares on loan and a short position. If it is very risky, the odds of you coming out profitable are low. That interest rate will go up, right? Now, since we had a red day today on AMC, the short borrow fee rate actually went down, which is to be expected, right? Anytime that you see this go down, the odds of a short position coming out profitable will go up, and the risk associated goes down because they have a higher chance of coming back down to a green position. However, we did not drop that much, right? We dropped down to about 18.9%. That is what that annualized interest rate is and how it is associated with the current stock price and different factors. Days to cover, now this isn't a number that I pay super close attention to, and this has been confused a couple of times with when shorts have to cover positions, and that's not necessarily the case, right? So days to cover actually refers to the short interest divided by the 3-month average volume, right? And this is actually a number that's starting to come to be a little more useful because we have been, trading AMC for about 3 months now. This number is actually going to give you a better idea of how difficult it is for a short to come out profitable on their position. Days to cover, any number over 1.0, I would consider it to be significant. Anything over 1 would signify to me that it is becoming difficult for a short to come out profitable on their position. And this coincides with the fact that we did in fact have a squeeze when it was at 2.4, right? So it was at 2.4, the odds of them coming out more profitable was low because the stock price was already down to a low of $2, right? Very, very low stock price that coincided with that 2.42 number. The low was actually $2.02, and it squeezed up. Now, the number's starting to go up. We've seen an increase of 13% over the last 7 days, which is good. That means we're trending in the right direction. That means we're stepping towards the odds of us coming out with a squeeze potential on our hands. Shares on loan. This comes out to 150.59 million, which is 10.81% higher than we've seen 7 days ago. This is huge because whether or not these shares on loan are actually shorted or not, they are shares that are unavailable, right? This is part of the utilization. These shares on loan, unless these people who got lent the shares decide to lend out to somebody else, which institutions and other hedge funds can do, by the way, these are unavailable to shorters, right? This is going to be hard to get. That means that the available shares for shorting goes down, whether these are shorted or not. They're still paying that annualized short borrow fee rate of 18.9% right now, which can go up or down depending on the profitability of their position, right? This is huge. This is so astronomically high. That is 36% of the total free float that is currently on loan. That is a huge number. Those are shares that can't get in the hands of shorts or are already in the hands of shorts, meaning that they're running out of freaking ammunition. That's massive. Now, some people might not know what the free float on loan is, and we'll just break it down for you in a super simple ape way. The free float on loan refers to what is left of the overall pie after insiders and institutions get their cut. So you can see here that the shares outstanding is 450 million, but the free float is 417 million. This is 99% of the time going to be lower than the actual shares outstanding because this is what's available to retail investors after the insiders get their cut and the institutions get their cut, right? So the free float percentage that you're seeing right here, the shares on loan, is huge, right? That means that 36% of what's available to the actual retail investor, the general public, is already out on loan, which is massive. And this comes out to a whopping 23.03% estimated short interest percentage of free float, not including puts, not including ETF shorts, and not including any naked shorts that may exist on the market. This is actually a little bit higher. 23.04% is the estimate as of today's live update changes on Ortex, which is astronomical, right? We saw this go up just barely today. I mean, an increase of 0.04% is pretty negligible, which isn't huge. So I would say today was a consolidation day in terms of short interest going up, but nonetheless, making great progress, taking some leaps and strides, and we are going in the right direction in terms of the shorts doubling down, which is going to only increase the odds of us coming out profitable when this freaking squeezes. It's going to be massive. I want to go over the daily short sale volume percentage. Now, this was from yesterday, and this tells you how much of the actual volume was short volume compared to long volume, right? 58% as of April 19th was short volume, and you can see that we're following this trend of increasing short volume, meaning that shorts are doubling down on positions, they're hammering away on this thing, and it coincides exactly with what Ortex is saying. Free float percentage on loan going up, shares on loan going up, days to cover going up, cost of borrow going up, utilization going up. All these numbers are going up, which coincides with the fact that we have an increasing trend in short positions doubling down. It's stupid. It's nasty. It's disgusting. We're going in the right direction, guys. So when we have these red days, these consolidation days, all these days where nothing's happening, you have to look at the grand scheme of things. And the grand scheme of things is this is getting shorted. As we all know, the short percentage is going up, and we know that just looking at the stock price and the numbers associated with it. Now, I want to show you guys the shares available to borrow. Keep in mind that this is not taking into consideration all of the available exchanges to us, right? This is only limited exchanges for short volume, but it takes all exchanges for the total market volume. That gives us about 150,000. Now, I don't use this number to say this is how many shares are available to borrow in the terms of they're almost out of ammunition, but in terms of the trending down, right? So we are trending down in terms of short shares available. This is going to be a very hard to borrow stock, which is going to increase that short borrow fee rate over time, which we have seen happen, right? Massive, massive, massive. That short borrow fee rate also goes up. That ETF shares available is gone up a little bit. Maybe it stayed stagnant. Not a lot changing there. What I pulled this up for majority wise was just to show you the call options expiring in the money. We don't have as many call options expiring in the money this week, which I don't mind. It's not a big deal. I'm not expecting us to squeeze this week by any means. In fact, I think it's going to happen maybe 1 or 2 months down the road. No date set, but we're just not there yet. We're not there yet. We don't have the volume. We just don't have the setup. We need some more people to buy into the stock. which is just factual, right? But looking at this, we've got 12,978 call options expiring in the money on April 23rd as of right now, and we would have 39,510 at $10. Now, if you come over here to the options chain, you can see the open interest in terms of what we have on the 23rd, and this would add up. It's just doing the math for us, right? So if we add in that extra, $10 strike, you would have 28,000 call options expiring in the money. Not all of these are necessarily buy calls. It could be covered calls. We don't know for sure, but nonetheless, we are trending in the right direction, and this could hypothetically lead to delta hedging, or essentially market makers hedging for the fact that they're expecting some call options to be in the money that may be exercised, which pushes the stock price up because these end up getting purchased from market value, right? So a lot of great things happening right now. The last thing that I maybe want to show before we get into the charts is Vanguard. Vanguard has purchased a piss ton of stock across all of their different funds, right? Their total stock market index, their small cap index, their small cap value index, extended market index, and the Russell 2000. You have a crap ton. 12 million, 10 million, 6 million, 5 million, and 758,000, which means that they own, what does this come out to? 22, we'll call that 29, 33, we'll call that 34 million total shares out of the shares outstanding. So these guys own a big piece of the pie, and I don't think it's by accident that these guys own so much freaking stock. They own a lot of stock, guys. They own a lot of stock, and that's not by accident. Vanguard does not pick stocks by accident. They're in this to make money. They don't care about this. They don't care about the retail investor. They're to make money, which means that we have the same interest in mind, and that is making cash, right? A lot of great things happening right now in terms of AMC stock. We've got so much good news on the horizon. I talked yesterday about this this April 22nd SEC filing that I shouldn't say filing, but statement essentially saying you guys need to match collateral for liquidity. I mean, you guys see all this good news popping around. There's too much good stuff for me to say this is a dead cat. It never was a dead cat. It won't be a dead cat. And this thing is still 100% squeezable. Now, what I want to show you in particular with the technical setup right now is just super simple stuff, where we are right now and where we are grand scheme of things. Microscopic, macroscopic, right? Obviously red right now. We had a green day yesterday, just barely, about 4%. Today was a red day. Opened red, which coincided pretty much even Steven with the SPY and IWM, right? The SPY had a massive, massive sell-off today. Initially at market open, you saw it was negative, I think, 2% on the day, which for an ETF is extremely high selling rate. That's a huge drop. And this coincided with AMC as well as IWM. IWM also had a pretty solid sell-off, and this coincided picture perfect with AMC happened, right? I mean, look at this setup. These are 2-hour candles, massive sell-off, consolidation, and a slight recovery. You look at AMC, it's probably going to look dang near the same. I mean, you had a massive sell-off, 2-hour consolidation, slight recovery, right? So a lot of this stuff, I think, is because of the current market conditions. I think you're seeing a lot of these big hedge funds start to move some liquidity from other stocks into, having collateral for maybe this April 22nd date. It's all obviously hearsay. It's all speculation. We don't know for sure. But that's my hypothesis. So keep it on the back of our minds. Grand scheme of things, we're going to start with the microscopic, actually. Microscopic, slight sell-off. We're still sitting in a good spot, nonetheless. Still consolidating. I would call this consolidation between a pretty tight price zone. So you're consolidating between a triple bottom right here at about $9, and then what could be eventually a triple top at about $11.25. Now, if we get a triple top right here, something that I want to point out that I find very fascinating is the last time we had a triple top setup like this was back here in what would have been early February. And what happened is we had a triple top, 3 touch points at a level of resistance, which happened to be about $6.59, followed by a down period in which we touched about $5.50. And after we finally got the push over this triple top setup, it ran, and it ran hard. We went up to $11.89 initially, and then followed it through with a run up to about $14.87 at its peak. Right? Now, what do you see in common here? I'm all about trends. Technical analysis is all about trends. Outside of this false breakdown right here, this is following the exact same trend as that triple top in which we ended up testing $14.87. Now, if we were to follow through with this exact same setup, this exact same trend, I would imagine that you're going to see a triple up in price. That's if we follow through, right? I'm not guaranteeing anything, but based on trends, triple top right here, top, 3 touch points, breakthrough, right? Top, maybe a third top right here, pretty quick here. Triple top, maybe another rejection, and then it pushed through $11.25. I wouldn't be surprised to see $25 to $30, right? Initially, getting us set up for that next squeeze leg run up, right? Stepping in the right direction, just based on trends alone, I think that is something worth pointing out. I like paying attention to that as a technical analysis guy, but in the grand scheme of things, if you don't care about the overall trend, what I will show you is just a simple pattern, right? 15 MA is trading underneath the 200 MA. It's slightly hooking down, but I would call this pretty lateral. It's about even Steven, which typically indicates an upcoming period of consolidation, right? 15 MA underneath the 200 EMA says that microscopically this is bearish, which we obviously know. We spent the majority of the day trading underneath the VWAP today, the volume weighted average price, which you can see right here. There's this gold indicator. This is the average price of anybody who bought holding that day, right? So if we have the average price sitting at 923 at the end of the day, and we finish the day closed above that, that would mean that the average person who bought that day would not be a bag holder. They would be slightly in the green. Vice versa, if you had the VWAP sitting at about 938 at the beginning of the day, but the price is down here at 912, that would mean that the average person's price for that day who bought in that day, the average price was 938, and you're trading underneath that, meaning that most people are red on the day. So today we were pretty bearish, right? Trading underneath the VWAP is obviously not a good thing, and that's something you can keep in the back of your mind in terms of watching to see how we're sitting on a current day in terms of, is the short borrow fee rate going to go down? Are more people likely to buy? Should the volume be low? Volume is always going to be lower on a day that we're trading underneath the VWAP. So that's something to keep in the back of your mind. But other than that, that's kind of the small scale. Large scale, look at the trend lines, right? You've got a descending level of resistance, right? 3 touch points is what we look for to signify a respected level of resistance. 1, 2, 3. And then we got 3 touch points right here on this ascending level of support. 1, 2, 3, right? What this signifies to me is that sometime within the next 1, 2, 3, 4, maybe 5 trading days, you're going to have a pretty hard push for the upside or the downside. I would be more inclined to think the upside since the macroscopic trend is bullish and we're looking at a macroscopic trend right now, right? But nonetheless, this is significant because this is a squeeze down in price action. When you're setting lower highs and higher lows, you're loading a spring. When you load that spring up, if you follow it through with volume, you get a violent move. And I would expect a violent move sometime within the next 1 week or so, right? So that's something you can keep in the back of your mind to watch for. Watch for this. You can easily draw this up yourself. Connect dots. That's all that you're doing. Technical analysis really is not hard. You're connecting dots. You're looking at trends. You're looking at trend lines. You want to see things psychologically about what you're seeing on the charts, right? Last thing that I want to touch on is going to be this overall volume. Did not have a lot of volume today. Volume has been steadily declining, which is resulting in a decreasement in volatility. Without that volume, you're not going to squeeze. I'm looking for between 300 to 500 million in total volume on a day to get this thing moving, and it's not there yet. So we got to watch for that. I don't think a squeeze is happening this week. I don't think a squeeze is happening next week. I could be wrong, right? But it's not going to happen until you see a bump in volume, and the volume is still decreasing, and we need that volume to go up if you want any sort of squeeze. I do think it's going to happen, but I just don't think it's happening yet. We got to be patient. Patience, my fellow apes. We can hold forever, but they cannot. The longer they hold, the more piss that they're draining down the freaking drain, my friends. And that is what I've got for the video here today. If you enjoyed it, please drop a like. It really does help support the channel. And consider subscribing if you'd like to see more content like this. Lastly, I have an affiliate in the description box down below for Webull. This is version 4 for the desktop. Great platform that allows you to start trading at 3 a.m. the pre-market Central Standard Time up until 7 p.m. Central Standard Time. If you use my link, you get 2 free stocks with a $100 deposit. I'll receive a free stock. Great to support the channel, my friends. And if you're not interested, that is totally fine. I just appreciate your support by taking the time to watch my videos. I also have a link to the merch store. If you want to check that out, get yourself a hoodie, a t-shirt, a Gorilla Gang mug, whatever you want to get. It's all here for you down in the description box down below. Pretty nice quality stuff. And then the personal Discord that I run is about $5 a month. This is an absolutely awesome community. We've got a lot of great stuff in here. AMC Money Lounge. We've got a great community of investors. We've got a stock bot that gives you momentum shifts, insider trading, news catalysts, all this sort of great stuff that can help you pick great stocks and options, whatever you want to pick out. That's here for you if you want a great community of investors and information available to you. And that's what I've got for you guys today. So thank you for tuning in, my fellow family, friends, apes, and Gorilla Gang. Catch you on the next one. Take it easy, and peace.